Straight to the top story this evening. India's GDP grew at 6.3% in the second quarter. This is largely in line with the CNBC-TV18 poll, which had predicted a growth rate of 6.4%. However, it is slower than the pace of growth in the same quarter last year. Growth in the manufacturing sector contracted by 4.3%, denting the overall numbers, but the services sector managed to offset some of that damage. Latha Venkatesh is here with more details. Latha, what do you make of the numbers and what does it mean for the full year growth target of over 7%?
Well, the 6.3% is in line and therefore it will not be a disappointment. It will not be exhilaration either. What's positive about the numbers? Agriculture has done extremely well at 4.3%. The number on the street, the average expectation was 3.2. So it's done much better. Now, there are worries that it could be a give back for the subsequent, that is the October, November, December quarter. The damage of the late rains, etc., can be negative. But for the moment, that is the surprise, positive element. Manufacturing has clearly been way more disappointing than what the street was expecting. The street was expecting a flat performance. It's come in at minus 4%. That's serious. Services have made up. But, the overall disappointment comes from the fact that the GVA, gross value added, has grown by only 5.6%. Most people were expecting a 5.9% growth. Now, GVA plus taxes minus subsidies gives you GDP. So it's probably good tax collection like GST, which has made for the good GDP number. But the underlying economic activity may not be as good as the GDP number is suggesting. Of course, these are provisional numbers. On the expenditure side, the consumption is very good, up 10% year on year, and so is capital formation, which gross fixed capital formation rising by 10.3% is very good. Government has been a poor consumer. Government has consumed 4% less than what it did in the same quarter last year. But all these could change with a lot of money going to state governments. Maybe in the second half, we could see the government emerging as a good consumer. The biggest drag on the expenditure front is that imports are far higher than exports. So what you call net exports is a big drag on the GDP from the expenditure side. That's another negative. But putting all the pluses and minuses together, coming in at 6.3, most people are betting that the full year number will be 7% as the Reserve Bank expected. And with the growth also coming in as RBI expected, chances are that the Reserve Bank will go with a smaller 35 basis point hike in December compared to the 50 basis hikes that it was giving in the previous policies.
All right, Latha, many thanks for taking us through those details. Now moving on.